What are the Conference Board's findings?
Well, one of the most important indicators that we use in order to track the Chinese economy is our leading economic index. And over the past few months, we have seen that leading economic index slowing quite significantly. What that means is that the economy is significantly moderating right now and also in the next couple of months. We still expect it to be pretty much a soft landing. So I think in the short term, we don't see the immediate problems. In the longer term, or the medium term, if you like, so beyond 6 months, we may actually see some more problems, because one of the issues that we still find in our data is that the amount of bank loans that are being issued continues to increase quite significantly. It has slowed, but it is still a very important part of the story, and that is something that is probably not sustainable in the medium term.
Well, the terms you use are pretty scary. You're saying there are risks for a meltdown in China, and those risks continue to rise. What about the credibility of some of these theories by hedge fund managers like Jim Chanos, who says that China's on a treadmill to hell? Is that going to happen?
Yeah, as I said, I mean, we have to really make a distinction between the short term and the medium term. And, even in the medium and long term, I think meltdown is really a big word. The chances of a soft landing are there. But the problem really is, I think, that in the policy environment, we don't really see a change of course. It's very much kind of the traditional instruments that the Chinese government has been applying to slow down the economy, trying to rein in some of the credit, trying to control some of the price increases and so on. But in the medium term, that is not going to do the trick in China, because ultimately the economy is full of imbalances, and there are these imbalances that need to be readdressed. The economy needs to shift to more of a consumer economy. We need to spend considerably more effort on the social infrastructure of the country rather than the hard infrastructure of the country. And there are those kind of things that require bigger policy changes.
Yeah, okay, Bart, if you're saying that a meltdown is possible and that risks are rising, I guess investors want to know what's the probability of that scenario playing out?
Yeah, well, the probability of such a thing is very hard to give, of course, because it is really the policy environment that is going to determine that. I think the signs that we have to look for in the next couple of weeks is, whether the global economy is holding up. That obviously is an important factor for China. And also the transition of the leadership in China that is going to take place, whether that's going to be a smooth transition, provides a better chance that we can begin to address some of these serious issues.
It's interesting that you mentioned how other global economies are doing, because right now in this time of an economic slowdown in Europe and the U.S., people are looking towards China to carry the load. Are you saying that's not possible right now?
Yeah, well, I mean, we should not forget that China is still growing about 3 times as fast as what we're seeing in Europe and the US together. So in that sense, China is continuing to lead. And even if the slowdown, even if the soft landing is leading to a more moderate growth rate of, say, 6 to 7%, it will still be a very important factor for the global economy. However, if we see a collapse in stock markets and if we see not a global recession, then of course China will suffer. And growth may then be considerably slower, and that would then be, of course, a threat to the global economy.
Right. When you say 6 to 7% GDP growth in China, some are saying that is a crash for an emerging economy that has 1.3 billion in its population. What to you is a decent growth rate?
I think if the economy would gradually moderate over the next 2 to 3 years from the current 9% to 7 and 8%, that would be very reasonable. If it falls below 5%, I think it's going to be worrying. But as I said earlier, for that to happen, we really would have to see a failure to change policy course within China, and we would have to see a major slowdown in the global economy. And those are things really which, at the moment, the risks for this are increasing, but are not really in the forecast.